Hello again, traders, and welcome out. This is Songket from Maverick Currencies, and let's take a look at markets today and how things moved and where we need to be as far as our next 24 hours goes. So let's start with the market analysis and take a look at the market performance for today. Today was a mildly bullish day, and there was a lot of choppiness in the equity markets. S&P only up about 0.17%. Where the World Stock Index VT was up only 0.38%. Crypto took a bit of a hit today, down 4.32%. And what we're noticing now is the gold start to pull back. So gold again hitting that 2,000 mark is start to retreat from that level. And we have seen a nice bounce in the oil market, 5.45%. So as we look at the market theme, nothing really has changed in the since last week. Again, the big thing really what we saw today was the gold pullback, and that was again because the yields started to rise. So we have seen a lot of drama in the banking sector in the last 3 weeks. We started to see some sort of stabilization in that area, and the yields actually now start to rise back again. If we take a look at the S&P 500, we are noticing that we are still in this range-bound price action. So remember, in a range-bound price action, we need to be toning down our bullishness and bearishness. +1 to -1 is the outlook, and as you can see, we have an opportunity to both sides, and we get some tails in between. This is more like a day-to-day market. If you're trying to figure out a multi-week, multi-month trend, this is not the market for it. This is trading defined range, and until it breaks that resistance or the support area, this is likely to do the same thing. So be cautious and use the right strategy for this market condition. Same thing in the World Stock Index. You can see that we have wide range, pretty much starting, the December here. We broke out in January, but then we are now within this range. So until we break, just keep the powder dry and use the right strategy, and timeline for those trades, I think it needs to be shorter. Now, let's take a look at the crypto world. As you can see, the crypto world is rejecting that resistance again. So we have seen quite a bullishness in Bitcoin. But outside of the Bitcoin, taking a look at the Bitcoin basket that we're looking at 4 major cryptocurrencies, you can see that we are not really breaking out to new highs. So this is one of the things that I talked about last week. I'm a little bit more hesitant to buy crypto as a whole because we are not really seeing a broader strength. Maybe the Bitcoin chart looks much better, but outside of that, I don't really have a lot of currencies participating in that kind of move. So let's take a look at the daily performance today and see where the big percentage movement was. And starting with the crypto markets, you can see the Bitcoin was down 3.59%. Bitcoin Cash 4.64. So modest losses across the board. Even Bitcoin kind of joined everything else today. So between the 3 to 5% range, everything is down. Is this in a buying opportunity, or is this a shorter term top? I mean, that's something we have to look into the charts and see what's the charts telling us. Now let's talk about currencies. Definitely a decent moves across the board. But again, as you can notice that this is, again, the markets where you need to be selective on currencies that you want to be actively trading. Dollar is not really moving much. It's only up 0.1, down 0.11%. So it's not a big mover. Aussie was almost flat today. So where was the big move? The big move was in the yen, down 0.84%. So we have seen yen being a very volatile trade. It goes up fast, comes down fast. So we talked about this in the currency room. You want to be cautious with the yen and be careful for these quick rise and fall. But this is the currency you want to be mostly trading on velocity. Now the Swiss franc, euro, pound, they all are continuing to do well. As we talked about the best performer last week, going into this week, these are the currencies that we actually like: the euro, Swiss franc, and the pound. A bit of a surprise for some traders was the CAD. CAD did bounce back very nicely. I mean, this is one of the best start of the week that we have seen in the CAD, and CAD is bouncing off a very strong support level. So CAD remains range bound, and it's getting a nice bounce off the support. Will this continue? We'll have to take a look at the charts, but this is where the relative strength was. And relative weakness remains in the Aussie and the Kiwi. So those are the places we need to continue hunting. Now, looking at the market outlook, I mean, this is whenever I see a sideways market, I bring everything down to zero, which means that I'm solely trading on velocity. If I see a good movement, I'll jump on the upside. And if I see things turning, I will jump on the downside. This is the market where I like to use short-term strategies, but then there's definitely good opportunities to be had. You just need to make sure that you're using the right strategy. But I'm not really bullish or bearish at this point until we clear out some those levels. As far as the weekly calendar goes, this is not a jam-packed week like last week. We're starting off it tomorrow. We have consumer confidence out of the U.S. I'll be paying attention to the Aussie CPI. This will be the first one that we need to pay attention to. And then on Thursday, we have the GDP numbers. So again, this is not a busy week, but at the same time, this is a week where you might get some more continuation and less of that volatility because of these news events. I like Friday as well, where we have the Canadian GDP and the U.S. core PCE price index. But until then, you can see the schedule is very light. So let's do a quick currency analysis and see where the velocity score is. And as we take a look at velocity score, it looks pretty clear. Relative weakness in Aussie Kiwi, relative strength in CAD, Pound, and Swiss franc. So what we need to be doing is that we need to be looking at these pairings, comparing Aussie against the Pound and Aussie against the Euro, Aussie against the Swiss franc, and maybe perhaps we can take a look at Canadian crosses as well, especially if there's a continuation. Currencies that we want to avoid right now is the dollar. Again, dollar is stuck in this limbo right now where it's not really moving higher, but it's not really moving lower. So it's not really bullish or bearish. So I'm right in the middle there until it breaks a certain level. I'll be interested back in the dollar pairs. But outside of that, I think we can continue to hunt in these European currencies and then perhaps also take a look at CAD at the same time. So let's jump into possible trades and take a look at what the chart setups are telling us. So let's just start first of all with the bond yield. So one of the things that we've talked about in the last 2 to 3 weeks is the bond yields have kind of come back and forth, some aggressive stops in between or drop in between. But if you look at the hourly chart, we've seen a very nice steady recovery in the past couple of days. Now looking at the daily chart, I talk about this 200 moving average. As you can see, it just could reclaim or it's just retesting that 200 moving average. Can it bounce all the way from here? I mean, that's something we'll have to kind of watch. But yeah, this is where the bond yields are not really falling apart. I think maybe we'll have to get some economic data to spark that move. But this was, again, all started with this downfall in the regional banks, followed by actions from the Fed. And this is where we are. So keep an eye on the bond yields, and especially this is really affecting gold as well, because if you take a look at the gold chart, gold looks very bullish, but as you can see, it's kind of coming into the resistance area, which is now the support. If it gives up this level, I think we can pull back further. And especially if the yields can rise, this can continue to fall back further. But let's take a look at Aussie and Kiwi, because this is where we are seeing relative weakness. So let's start with the Kiwi. So I do like Kiwi as a short, especially as we are in this support area. So we are continuing to test the support. You can see that in the past couple of times, we have rallied off that level. But as we give up this level, I mean, you can see we had a massive rally in October all the way till the end of December. So after that, we can see that this has been a very slow decline, but that was again the top. This has been slowly declining. Every little bear rally is being shorted. So what I'm looking for is a bigger breakout to the downside. Could this happen in the next 24 to 48 hours? Again, that's a direction, but it's moving at a very slower pace, which means that you need to be patient and get the timing right for this. Same thing goes with the Aussie. I mean, technically, this looks very weak. But as you can see that this is, again, testing a very critical support area, because I think as we really break the support, this is where the big movements will come. But right now, as of this point, Aussie is right at the support. This is, again, one of the reasons why I like Kiwi more than the Aussie at the short side, because this is sitting at a support, so we might get a little bit push in the Kiwi. Now, Canadian dollar is the one that looked interesting, as you can see that it's bouncing once again from that critical support level. But it's not really out of the mess here. It's below the moving averages. There's a lot of congestion here. So this really needs to break out of these areas to really get attractive again. You can see that when this big move happened last year in November, CAD fell very rapidly, and really this was the range that we were dealing with. And literally in a week, we cleared out of the range, went sideways a little bit, and got a massive drop after that. So with the CAD here, we have been in this congestion for the last 3 to 4 months. And this is definitely where it's sitting at the bottom end of the range. This is a very critical support. Let me show you on a monthly chart. You can see that this was a very strong resistance level that we tested for years. 2016, 17, 18, 19, 20, 21, and then it broke out in 2022. So, I mean, we had seen a massive retest here. And this is where the support is coming in. And that's why I'm not really a big fan of short Canadian dollar here. But at the same time, I'm very cautious on the long side because there's just a lot of congestion that needs to go through. But once it clears out this area, there's more room for this to recover. We have seen that the CAD tend to do well in the second quarter. So as we are almost finishing up the first quarter, I think this has a little bit of a chance to rally. So we have to pay attention to this. Now, looking at the pound, that still looks better here. Look at the daily chart and look at the very important level of resistance as well. So one thing to note is that there's some currencies that are sitting at a massive support and a massive resistance level. Aussie at a massive support, Kiwi at a support, and the pound at a resistance here. So this definitely has room for a run if this can really clear out this level. So I do like pound on a further upside on especially clearing out this resistance area. On the other hand, Swiss franc, I mean, take a look at that big drop we had from that Credit Suisse debacle with the bank. As you can see that we have almost recovered more than 0.5% of its losses here. So at this point, there's no signs of turn yet. But at the same time, I think we probably retest this resistance. And after that, we'll probably see a direction one way or the other. But again, if you are on the bear side, I think this is not the right time. Same thing goes with the euro. We had a massive drop and then it recovered. So we have seen quite a bit of recovery in this one. So if you're looking for continuation to the upside, I think that's the right call at this moment. If you're looking for a turn, this is nothing in the chart is telling you that this is ready to turn yet. But if you take a look at the yen, this is the one that I talked about. I mean, look at the yen, how much it has really fell back. Look at the pattern in this one. There are some wild moves in between, which means that this has been a great currency to trade on both upside and the downside. We can see a rallies, we can see a fall and a reversal. So this is again goes back to what the equity markets are doing. If equity markets have stabilized, that means that the yen is going to stay weak. At this point, it has stayed above this 200 moving average. So I do like some of the yen crosses if it breaks kind of lower. And the dollar, at last, you can see this thing is not really moving or going anywhere. This thing is still sitting at this mid level of the support and this rally up here. So from the low to the high, we are sitting at a 50% retracement. So until it can really break one with the other, there's definitely better currencies to trade. And I think this is the thing where last year it was all about the dollar and the yen crosses. But now, if you look around, there's definitely other currencies to pay attention to. So let's just start our analysis, take a look at some of the charts. Let's start with the Euro Aussie. And you can see that the daily chart still looks great. We have this little range building up here. If this breaks above that resistance at about 62.59, we do like it to the upside. Looking at a 4-hour chart, what this is doing is that it's just being in a sideways pattern here. So while it's in a sideways pattern, we want to be patient. Once we get a breakout, we want to get in. Same thing goes with Euro Kiwi. And Euro Kiwi is doing the same thing, and it's trading in this little wide range. Once it breaks out above, I think that's the time to be entering. On a daily chart, you can see that it has a massive resistance at 175. So if you can break above that 175, I think there could be further continuation to the upside. On the other hand, if we could do the same thing with pound crosses, if we take a look at pound against the Aussie, let's start that again. Pound against the Aussie and pound against the Kiwi. They'll probably be doing the exact same thing, but right now, again, pound is doing better and it has already cleared out the resistance. So I do like this on a further upside. Any sort of pullbacks would be good buying opportunity. Same thing goes with pound Kiwi. And same, again, we are Got a nice little pullback over here and a massive rally. So at this point, it kind of looks extended, but I would love to see this pullback to really buy those into the pullbacks. But daily chart looks great. They are breaking out. I think these are the currencies that are showing good opportunities. Let's talk about Canadian dollar as well. One of the charts that really stood out to me was, currencies pairs like Kiwi CAD, which, as you can see, had a massive rally. If the Kiwi is going to weak, and if the Canadian dollar doesn't weak, actually strengthen in the short term, I do like these pairings as well, especially if it can break below this 84 area. I would like it for the downside. Same thing goes with Aussie CAD. Aussie CAD is showing a bear rally, and if you can break below this, I think there's further continuation to the downside. So notice that CAD doesn't look the worst here. It's the Aussie and Kiwi that looks the worst here. So that's where the relative weakness is, and those are the areas we need to pay attention to. Now, if we continue liking the yen short, what do you want to pair with? One of the currency pairs that have been very actively trading in this range here, I mean, you can see that we got a massive downtrend, got a nice rally, and we almost were testing the support. At this point, if you do like dollar long, I think dollar yen is worth a shot with the support right at 128, but it does have areas to recover. But this is, again, one of those volatile currencies that you need to be very careful for. On a 4-hour chart, this is still downtrending. So we got a nice little rally here, but we haven't really cleared out the levels. What I would like to see is that it breaks out, pulls back, and then break out again. That's the kind of pattern that we need to see for this to turn. On a 4-hour chart, you can see this is the pattern that we were in before it broke lower. And if you're looking for a turnaround, that's what we need to see in the coming few days. So these are the setups that we are paying attention to. Again, looking at some of the other pairs that we discussed, like Euro Yen, that actually looks very similar to me. Aussie Euro Yen to the upside on continued weakness in some of the yen crosses. So good movements across the board. And I think this is an opportunity where stay focused on what's moving and play relative strength of weakness. Don't be married to dollar crosses. Just focus on what's moving. I think you do much better. Aussie Kiwi, like I said, is the primary focus here. So if they do have bear rallies, that's okay. Nothing goes straight down in a straight arrow. We'll have bounces in between. We want to be looking for bases or rallies to short into. Trade less and then focus on currency in play. We are almost toward the end of the month. This has been a great month. I mean, with volatility and lots of opportunities, and a lot of traders did really well. So hold on to your profits and stay cautious. We'll have a lot of opportunities coming ahead. Thanks for joining. See you next update.